Hey everybody, it's Larry Steinhouse, and this is the Larry Steinhouse Show. I'm so excited. We're moving on all day long. We're having a great time today. We're talking to a bunch of people about a bunch of cool things. And I've got somebody here who we had on last time we did the Coach-a-thon. We have Ramsey Coulter, and Ramsey talks about some of my favorite things, which is credit. And I am a big fan of credit, building credit, how to build credit, how to make lots of money with credit, how to use your credit to advance in your life. So Ramsey's certified as a credit expert. He's actually certified as a credit expert and Fair Credit Reporting Act, and he's also Fair Credit Reporting Act certified. He's been used in federal court to write reports on the accuracy of credit reporting and the damages sustained by consumers who have been victims of the credit bureaus, banks, and debt collectors reporting inaccurate information, as well as inaccurate coding supplied to the credit bureau. So really what it's all about is, hey, look, if your credit isn't accurate, he can help you, and also your credit should be accurate. It drives me nuts that people don't have their credit accurate. So Ramsey, tell us a little bit more about what's going on in the world of credit.
Sure, absolutely. Thanks for having me again, Larry. I'm glad to be here. I'm glad you love to talk about credit as much as I do. It makes it super fun.
Or it makes us very boring. I'm not sure which.
Well, fun for us to talk to each other.
Right.
So what's going on in the world of credit? With credit reports, there's always going to be some type of errors. A lot of times, there was a study from the FTC a few years ago that about 79% of consumers have some type of error on their credit report. It could be something as minor as an incorrect name or a misspelled name. If you fill out an application and they put LARTY because they,
Sure.
Human error. That's fine.
Sure.
That's not a big deal, but there are many errors that are a big deal that we run into where there's what is called mixed merge files, where other people's information is showing up on your credit for no fault of your own. It's the credit bureau's fault, screwing up data. They are data companies. They're supposed to have accurate data, but we know that sometimes can be hard.
Yeah, right. So one of the things that I teach people is to get as much credit as possible. And people they like, what? What do you mean? I don't understand. So right now I have over $450,000, kind of about $100,000 since the last time we spoke.
That's awesome.
About $450,000 available to me on credit cards, and people are like, why in the world would you do that? I give them my explanation. What is your explanation for somebody crazy like me to have $450,000 worth of credit available on a credit card?
Well, yeah, that's great. You have great credit now. You don't have to worry.
I have terrible credit.
Well, you did. You told me you did.
I'm kidding. I actually do.
Right. So, if you're not planning on buying a home anytime soon, obviously you're an investor.
Exactly right.
You can flip.
Right.
You know what to do. You know how to use other people's
Right.
money and stuff. So who cares? Who cares if you apply for 20 credit cards a month?
Yeah.
Because
Exactly.
you're in a different situation. My clients or potential clients who come to me, a lot of them have no credit or bad credit or credit that went bad, and there's definitely legitimate reasons: death, spouse death, divorce, sickness. I just got off the phone with someone who had cancer and she's trying to get a mortgage, and it's rough when you have a bunch of stuff that went bad that's
Right.
kind of not in your
Sure.
capability to take care
And
of.
of course, I was kidding. I actually do have good credit. But I actually believe that anyone who has a credit score of 740 or above is wasting their credit score. So, and I know you again,
Right.
and our views. So Ramsey, because Ramsey works with mortgage companies trying to help people get mortgages.
Right.
So, like, if you have a credit score like borderline whether you're going to get a mortgage or not,
Yeah.
like Ramsey could pop up your score 5 or 10 points so you can get the mortgage.
Right.
That's very different than what I'm doing, because what
Right.
I'm doing is I'm saying, look, I'm going to teach you how to get as much credit as you can, so that if you have, if an incredible opportunity comes along, right? You can.
Right.
I mean, I teach people how to buy houses with credit cards.
credit
So it's kind of different. So
Right.
so
That's not what we
Right,
advocate.
exactly.
That's not what we tell people to do. But if they've completed our program, they have a house, they have a car, and they want to do a bunch of fun stuff with Larry, they definitely should at that point. But if you don't have a house and your goal is to purchase your house and not investing houses, then you probably want to wait to open up a 30 or 40 credit cards.
Yeah, right. I think it's up to 27 now.
27?
Yeah,
Okay,
27
sorry.
now. Yeah, which is kind of cool. I was going to bring my book and I forgot to bring it. I have an actual book. So like, everybody ever see those books that people put business cards
Right.
in?
Yeah.
I have
You
one
have
of
one
those
for credit
books with
cards.
credit cards in it. Yeah.
That's awesome. Yeah. Well, and so here's the downside. So I did run into a client before who had 35 credit cards.
Okay.
She had nowhere near $450,000 because she had bad credit, and most of them were store credit cards.
Oh, that's a problem. Never
Right.
store credit card. Right.
And so, she was on the verge of bankruptcy because she had so many credit cards, and it was, so it was really bad situation for her. But she didn't know what she was doing. She's not Larry Steinhouse. She didn't, she was trying to buy a home and not investment property. So that's a completely different story. And if you're trying to do that, you should not have 30 credit cards. Or maybe if you opened them a long time ago, sure, no problem. But not in the last year. But
yeah, right. And actually, I mean, one of the things is never ever get a department store credit card, and always it's always Visa, MasterCard, American Express. And then the only thing I tell people is you do, if you want to get a Home Depot or Lowe's card, that makes sense,
right? Because
you're a real estate investor. Right. But that's it. If you're not a real estate investor,
and Home Depot and Lowe's actually give high credit limits compared to other store cards. A lot of store cards will keep you below $4 or $5 grand max. Home Depot and Lowe's, we get clients $30,000 available, and that's a game changer for an investor or someone who has a construction business.
Right, and also, by the way, so the last time we spoke, I said my goal was to see how many inquiries I can get. And it's a funny story. So just so you understand, last time we were on the show, I actually was trying to experiment to see how many credit inquiries it would take to lower my credit score below 700.
Right.
All right, so how many inquiries do you think I'm at now?
55.
No, it's not that bad. 34.
34.
Right, and I finally got below 700.
Yeah, finally you reached your goal.
I finally got there. Isn't that hysterical? So you're like
the opposite goal.
What's wrong? Right, exactly. What's wrong with this nutcase who wants to? But here's the real reason. First of all, I wanted the credit, but more importantly, I wanted to experiment with it. It's not important. I'm not going for a mortgage.
Exactly.
My car. I got a car loan. I recently got a car loan. I don't know if I got it before I saw you. I don't know, but I got a car loan for a brand new Corvette Z06.
Awesome.
3.5% interest. And the funny part was the guy goes like, goes, well, how much? I said, how much do I have to put down? He goes, oh, you don't have to put anything down if you don't want to. I'm like, are you kidding me? I just drove off the car lot with a $100,000 car with a signature with 3.5% interest. I can't get 3.5% interest anywhere. So it was awesome. So you're right. So credit, if you know how to use it, it's not just about your credit score. Right. It's about how you use your credit. I know I'm an anomaly, and please don't necessarily do what I'm doing.
To all my clients watching, don't listen to that.
Right, that's exactly the truth. Eddie Ramsey's going, don't listen to what I'm saying, but understand that
it's possible.
If you know how to use it, yes. Right. But make sure you got a lot of education on what I'm doing before I do it.
A lot of self-control too, because
absolutely.
I mean, $450,000. Hey man, you run that up and don't have the funds to pay it off. You're talking bankruptcy for sure.
But bankruptcy's not so bad. I've been there.
Right, I know you have. So it's fine for you.
Could you imagine somebody right now thinking, "Wait a minute, let me get this straight. The guy's got $450,000 worth of credit cards and he went bankrupt." This again. It's the rule. So and you said not to waste your money, right? So I just wanted to show everybody, the studio. There's a big camera in the whole studio right now, showing all this equipment.
Nice.
Super
nice here.
I just wanted to talk about the wasting money.
That's what your credit cards went to put the studio together. Some of it, just one of them, right? One of the 34 or whatever.
It's not that bad. I just wanted to.
It's really nice here.
I'm having fun. I'm having fun with this conversation. That's all I'm really doing.
It's fine.
All right, so let's get back to realistic stuff. So the average person has like what is an average credit score for somebody in their 40s or 50s?
Well, the average credit score actually in Pennsylvania, this was released last year, so the average credit score for all consumers, regardless of age, was 686 in Pennsylvania. That's the average. So that includes people with terrible credit and people, retired who may have excellent credit, 850s and stuff. But the average is 686, and so that's, if you don't have that, you're below average in the state of Pennsylvania. Different states, of course, have different scores. But that was Pennsylvania. So, the goal for anybody who enrolls in our program is to try to get them as high as possible. But everybody has different goals. Some people came to me. I know a client signed up the other day. He wanted to get a motorcycle. He's a biker. He wanted to get a bike. He said, I don't care about anything else. I want to get a bike. Another guy who's a hunter. He wanted to get a 4-wheeler. But there are people who, most people want to get a home. And so, you got to have at least a 620 for the most part to get a mortgage. Of course, it can go down to 580 with FHA, but that's not fun. You don't want to do that.
The difference with the FHA is going to be obviously the PMI. And FHA, PMI, and conventional or mortgage insurance or MIP
big
is horrible because FHA changed the rule about maybe 6 years ago-ish where they used to say that once your home hit 20% equity, they would take it off.
Right,
now you never take it off, which
To
this is just the government once again screwing us. But I'm not going to get into that.
They're shut down. They can't do anything.
Yeah, right. It's like, but they'll still take your payment, right?
Oh yeah, yeah. They'll still garnish your wages right now. I'm sure of that.
Oh yeah. I'm sure you're right. Exactly. Yeah, right. Sure.
Yeah.
So the average person has this credit score of 686, right?
Not my average client, but yep.
Okay, that's great. But why do they call that fair, by the way? Why is a 680 a fair credit, not a good credit?
Sure. Well, I mean,
or excellent is a good. No, good is 700 and 720 is excellent. Or I can't remember what the numbers are.
So I mean, everybody has different ratings, of course, and
right.
FICO might say something, Vantage might say something else. But I mean, basically, if you're above it, I would say a 680 to 700 is definitely a good credit score. Excellent is above 740. So once you're above 740, you are considered excellent, or and so you get the best interest rate. So again, exactly what you said, if you have a 740 and an 850, there's no difference. There's no benefit once you're above a 740. So you're going to get the exact same interest as that person with an 850, and it's just bragging rights. Right. Once you get above 800, it's just, I have an 800. Well, great, you do nothing for the last 10 years.
Right, exactly right. And I tell people this all the time. You have I come to people and they brag and they have an 850 credit score. I'm like, cool. That's sad. And of course, our opinions, the way we do things is different. I'm like, that's sad. You should damage that credit score. I'm like, what do you mean? I'm like, you should apply for more credit cards and get it damaged so you can have more credit when you need it. Because look, and here's the reality. Reality is, if you have the credit, opportunities are going to come. I'm talking to my school right now. Look, I keep saying, you hear that giant sucking sound? That's the wind being sucked out of the economy right now. And if we're not prepared for what's going to happen in the next 2-3 years with either credit or money in the bank, we're not going to be able to take advantage of what's coming. Yep. So if you have really good credit, and if you have the credit already, because what happened in the last recession, 2008, you probably remember this, they started actually reducing people's credit amount. So if you had a $30,000 credit limit, for example, one day you had a $6,000 credit limit. Yep. So if I have 26 cards that have $30,000 credit limits, and next year they only have $10,000 credit limits, I still have pretty good credit limits. Right. And that's part of my thinking is, what happens if that happens again? Let me, this bank screws me. At least I got this bank to go to. And the other thing too is, if you remember 2006, 7, 8, or even earlier, you used to be able to get credit cards at 7.9%, 9.9%. Yeah. I don't see those anymore.
Yeah, no,
it's crazy. They realize what's going on. They're not going to play that game anymore.
Yeah, and it does suck. I mean, you used to be able, I know you said about store credit cards. People used to be able to go to a store and get approved with no credit or bad credit because it was kind of a credit builder account. Nowadays, you can't even do that. I mean, we have clients all the time with 550, 600, and they're getting denied for store cards, which they should talk to me first, and they shouldn't have been doing that anyway. But they do get denied, and they're like, well, I got denied for a Kohl's card, like my life is over. And I'm like, well, no, they're a lot harder to get now.
They are harder to get.
The major banks, they know people don't pay store cards before anything else. They think, and here's a real story from one of my good friends. He said, oh, well, who cares? It was just a Macy's card. Who cares I didn't pay it? It was only like just $200. Your credit cares. Your credit doesn't care if it's a store card, a secured card, unsecured card. It doesn't matter what it is. And the late pays don't discriminate. A 30-day late's a 30-day late on any account. It's going to damage your score. And then, of course, a 90-day late, which he went to 90, 120, 150, 180. That's a charge off. That is a devastating thing for his credit. And he just was like, oh, who cares? It's a couple $100. The amount doesn't matter. I don't care if it's $25. If you're late, you're late, and it damages your credit.
Yeah, that's another reason why. So how often do you think people should check their credit score?
I mean, I check mine all the time, of course.
Yeah, I'm checking mine like every week or something. I know, right?
Yeah, literally every week. Right. But I'm a little crazy about it.
Yeah,
but,
same here. Right.
But I mean, I would recommend. I mean, at least once a month, or at least twice a year at the bare minimum, or at least the most important time is before you apply for anything else.
Correct.
That's the most important time to check it, and not the day before, a month before you think you're. I mean, of course, your car might break down, and you need to go check it that day, and you need to get a car. You got to get to work, or else everything else goes bad. I get it, but you should plan stuff out. You should plan to buy a car. You shouldn't just go impulse do it, and you give yourself 30 days to pay down credit cards. In your case, it's probably not a problem, because even if you owe $45,000, you're at 10% of your $450.
Exactly.
So it's not a big
and
deal.
That's why. And that's why I have it.
But
so
for
explain that.
Else,
explain people why that makes sense. that I have a $450,000 worth of credit,
Yep.
and my number could be 45, which is a lot.
That's
to
a lot.
a lot of people,
that's
right?
A lot of people making a year, 45 grand,
Right.
and that would you would barely see a decrease in your credit score because you're still below 10%
That's right.
of your available credit or credit utilization. And so, let's say a normal person has, $2,000 in total credit cards available. That's very normal to see, and they owe $1,000, extremely less than your 45,000,
Right.
but their credit utilization's at 50% out of the 2,000, and they just probably lost 30, 40, 50 points by only owing 1,000, where you can spend 40, 50 grand and you don't lose those points like they do. And they're like, well, Larry said, go spend, go buy stuff with my credit cards.
I never say, it's funny. I never say buy stuff with the credit card. I say get credit, and it's very different. And it's funny because like a lot of people don't. They hear me say the words. They don't. They don't necessarily go out and do it, but they hear me say the words. Why would I want to? Why would I want to spend my credit cards? I'm like, no, you don't. That's not what I said. I said get as many credit cards as you can. I don't care if you shred them.
There's a big difference. Yeah, and so we run into a lot of people who never have had credit. They don't have credit cards. They were taught not to have credit. Maybe their parents filed for bankruptcy and scarred them for life and said never get credit cards, and that's okay. You should pay cash for stuff, and you should only buy stuff if you have the cash to pay. Absolutely agree with that. But
unless it's a $100,000 Corvette Z06.
Well, yeah.
I'm kidding. No. All this is
Your
good.
situation's way.
I'm like right. I'm being silly, and and I'm actually the complete contrary to most people, which is pretty much why I became the way I am. But you got to have the basics and the foundation in place
For sure.
before you start doing crazy stuff that I do.
Right.
And if you jump from 500 credit score and you try to do what I'm doing, it's not going to work.
Right.
If you know how to have financial, if you have financial good habits or good financial habits, and you build your credit rate, and then you know how to use your credit, and you start doing what I'm doing, it's different.
Clearly.
But and your clients are very different than I mean, if I came to you, you'd probably like, what? Huh? It would probably you'd
Just
probably
say,
go crazy.
stop
right?
applying for credit, Larry. That's why your credit's low.
I know, right? I'm like,
And you're like, yeah,
but,
I know.
but it's
Okay.
no fun. It's what else am I going to do at 2:00 in the morning, right? So we got a couple of people I just want to shout out to. Rosemary says hi. Andrew Crick says Big Red.
Big Red.
And AVR says I have 15 credit cards, so he's obviously knows something about me.
Nice.
I don't know if I don't know who he is. I'm not sure. Maybe I do know who he is. Actually,
missed the
Maybe he
name.
looks familiar.
What would you say?
Yeah, AVR Santiago de Jesus. I think I know who that is, actually.
Okay.
So 15 credit cards, great. I'm hoping they're all Visa and MasterCards and not American. I'm sorry, not American Express. No,
Store.
not store cards, right? And then Lakia Young says, I need help. I have a 498 credit score, and I need to get at least a 580 so I can get out of my landlord high-priced house. All right.
Yep.
So I have to tell you that you don't need a 580 credit score. You can do it with a 520 credit score. So you're really, really, really close. So we don't know her.
And so elaborate on that because
Right.
other
We don't know her
lenders
situation.
are sitting here like, what the heck is this guy talking about? You got to have a 580 or 20% down.
She could, she could do. Actually, she could probably do an FHA with a 520 credit score, couldn't she?
Well, the standard FHA, it goes down to a 580 credit score.
Oh, is
That's
it 580?
the lowest.
Okay. Why am I thinking 520? Oh,
so
I'm thinking
they-
620 in my.
620.
That's what happened. Okay, yeah.
Well,
so
there are lenders out there who do advertise, we can go down to a 550 credit score or 520.
Right.
What they don't tell you is you have to have 20% down
Correct.
to make that happen.
Correct.
You can't have a
Yes.
that.
Yeah.
You have most people who have a 520 or 550 don't have 20% down for a house.
There you go. Right.
And
Exactly.
that's
For some reason, my head was thinking 620.
Right.
But you're right. Yeah, it is 580.
Yeah.
So what you can do. So what are some of the things she needs? She needs 80 points.
Right.
So of course we had no idea what her situation is.
For sure.
But let's give her some obvious advice that you would give somebody to try to help her build her credit score 80 points over the next 2 months.
It's possible. So somebody with a credit score of a 496 or whatever she said, it probably means that there are current late pays on the credit. To be that low in most cases, either there are currently accounts that are late today or that were recently charged off in the last 6 months. And so that's probably one of the reasons, and I'm sorry if I'm wrong, but that with somebody in the 400s, there's usually currently late payments. So the first best advice is to be current on all your accounts: credit cards, student loans, car loans. Check your student loans. So that's actually a great thing. I've had a couple of clients recently, or potential clients, who had no idea that their student loans were late by 4 or 5 months, and they applied for a mortgage, and they're crying, saying, "I don't know why my credit score is 490 or whatever." And I said, well, ma'am, it sounds like you don't know that your student loans are currently 4.5 months behind.
How would they not know their student loans 4.5 months behind?
So unlike credit cards, student loans don't harass you and call you a million times a day as soon as you're late.
Wonderful.
Right. So they say it's a benefit, right? So they won't report you. Most federal student loans will not report you 30 days late. They won't report you 60 days late, which is great if you know that you're late and get current before the 90th day. But then they hit you with a 90-day late, which is considered a major derogatory on your credit, similar in the same derogatory as a bankruptcy, foreclosure, repossession.
Yep. Yeah,
once you hit a 90-day late, it will be on your credit and damage your credit for a full 7 years. Of course, every year that goes on, the damage is less and less, but it will still be there. And lenders can say, hey, 6.5 years later, can say, hey, well, we saw that you were 90 days late. And you're like, yeah, that was 6.5 years ago. And they could still bring it up if you're trying to get a large purchase or something.
Well, that's typically on that, you simply write a letter, and that's typically enough for an underwriter as long as everything else is good.
Oh, yeah, to the underwriters. I thought you were going to say to the credit card company. I said,
no,
goodwill letters don't work that much anymore.
No, I'm talking about mortgages,
Gotcha.
which is pretty much what you're trying to help people with, right?
For sure. Yeah, that's the main reason why people come to us.
Oh, it's hysterical. When I apply for a mortgage, I have to explain why I applied for 35 credit cards in the last 2 years.
Well, when's the last time you applied for a mortgage? Recently or no?
Well, I did probably a year ago.
Okay.
And I had
what are you doing?
Yeah, it was like 17 inquiries or something. I had to explain every single one of them.
You had to sit there.
And I actually, what
was your reason?
I actually had some fun, and I actually said, yeah, I just apply for credit cards whenever somebody offers me a credit card. I figured, what's the difference? I'm like, at this point, what they really need, and as you start to learn the reality, you start to learn that they really just need a letter in the file.
Right. They
don't even read it.
It's called an explanation, letter of explanation. Yeah.
Right.
It's just, okay, well, Credit Karma said I'd be approved, so I applied for 5 credit cards.
Right.
And they're like, okay, cool, whatever.
Yeah, exactly. So I found that funny. So Rosemary was saying that Navient doesn't call when late. Yeah. Sally Mae does.
Navient actually is Sally Mae nowadays. Sally Mae kind of got bought out a while ago, so but maybe what she's referring to is private student loans. So Sally Mae does both private and federal. So for their private student loans, they'll harass you, they'll call you like crazy, which is good essentially, because at least hey, I need to get my crap together. I need to call them. I need to get on a payment. I need to get deferred or a forbearance. Those are options. Deferment just means you can defer the payment till later. You have I think it's about 36 months after you graduate. You have a total of 36 months where you can put it in deferment for whatever reason. And there's forbearance, which means something happened in your life. Someone passed away. You lost a job. You got cancer. You're sick. And you can do a forbearance, which is additional time. Interest is accruing every day, but at least you're not marked as late. But yeah, Navient, they're definitely a federal student loan. They will not hit your credit until you're 90 days late, and it's a devastating thing. It's very, very devastating. So check your student loans. Back to Lakia,
we have probably 1 minute left.
Sure.
Terry's asking a really quick question, and if we don't have time to answer it, I get it. Besides Open Sky, which is another good credit card company that will give you a secured card without checking your credit. I don't know. Okay, I'm not sure it's a credit. Okay, it's not really a question. Okay, but here's real cool, just real cool. So you guys know. So Rosemary said, "Hey, we're going to do a seminar about student loans." I have written a seminar about student loans that we're going to talk about probably March 23rd. So if you guys want to mark your calendar, Ramsey, it probably would be a really great idea if you came to that seminar. So we'll talk about that also.
Sure.
Real quick, how can people get a hold of you?
Sure. Yep. They can call for a free credit consultation, 610-350-4683, or Google us or Facebook us, Coulter Credit, COULTER Credit, and give us a call.
That's awesome, man. Say goodbye to everybody.
See you, everybody.